As a non-US founder, do you actually need a US company? This is a primary question for entrepreneurs eyeing the American market. The answer is yes. You can own 100% of a US company without a visa or ever setting foot in the country. In fact, the entire formation process can be completed from your laptop, anywhere in the world. But the real question isn't can you, it's should you. And a wrong decision here is incredibly costly. We will provide a straightforward guide for deciding based on your business and show you the compliance traps most people miss. First, let's be perfectly clear. Forming a US LLC has zero connection to your immigration status. It does not grant a visa. Myth 2. You need a physical US address. This is false. You only need what's called a registered agent in your state of formation. This is simply a service that gives you a physical address to receive official mail for your company. It is a mandatory requirement. So, it's possible and requires no visa or physical office. Then why do thousands of foreign founders bother with the process? The number one reason is immediate credibility. A U.S. entity instantly builds trust with customers, partners, and suppliers worldwide. It is also your entry point to the U.S. financial system, giving you access to payment processors like Stripe and U.S. business bank accounts. But the most powerful legal reason is limited liability. This builds a wall between your personal assets and your business liabilities. This protection is not absolute. If you commit fraud or mix personal and business funds, a court can pierce the corporate veil. For tax purposes, a single-member LLC is a pass-through entity. The business itself does not pay income tax. For many non-residents with no direct U.S. business activity, this means no U.S. income tax is owed, avoiding double taxation. This sounds ideal, but what is the one IRS form that even zero-revenue foreign LLCs must file or face a $25,000 penalty? We'll answer that soon. First, let's determine who the structure is actually for. The answer depends entirely on your business model. Case 1, the freelancer. You need to bill U.S. clients easily with Stripe or PayPal. A U.S. LLC provides that access. Case 2, the e-commerce seller. Selling on Amazon US? An LLC increases trust and streamlines payment collection. Case 3, the SaaS founder. A U.S. entity makes you appear more established and serious to global B2B customers. But who should not form an LLC? Case 4, the VC-bound startup. If your goal is raising venture capital, an LLC is a major obstacle. VCS almost exclusively invest in a C corporation. They are familiar with this structure, and it allows for easy issuance of stock. Now, back to that $25,000 question. Even if your LLC earns $0, you must file Form 5472. Failure to file means a $25,000 penalty. The second trap is accidentally creating a U.S. tax obligation. This happens if your income is deemed effectively connected income, or ECI. What triggers ECI? Having U.S. employees or a physical office. The objective is to use the U.S. market without creating these connections. Finally, a practical hurdle, getting your employer identification number. Without a U.S. Social Security number, you cannot apply online. It's a lot to process. Entity types, tax forms, income triggers. So how do you make a clear decision? Let's synthesize this. First, connect your business model to your entity choice. The freelancer, e-commerce, and SaaS types need credibility. An LLC is perfect. But if your primary objective is raising VC money, that fact overrides everything else. Your path is the C corporation, period. Second, connect the benefit of remote operation with the danger of U.S. tax triggers. Running your company from abroad is not just for convenience. The best strategy is to use the US LLC as a legal and financial portal while keeping your actual operations physically separate. So the decision is this. 1. Is my main goal cash flow and credibility, LLC, or VC funding, C Corp? 2. Am I ready for the compliance? One final point. Which state? While Delaware and Wyoming are popular, the best state depends on your specific business activities. A U.S. LLC is a powerful instrument for non-U.S. founders, opening doors that would otherwise remain closed. But it requires strategy. Handling these rules can be intricate, but you don't have to do it alone. Valis International offers complimentary consultations.